Hi, welcome back to the channel. Interesting news. OpenAI is thinking of IPO, which is initial public offering, which means they want to go public and sell shares. Interestingly, they are looking for 1 trillion valuation. And this raises the question, how come company is looking for $1 trillion valuation once they are burning 11.5 billion per quarter? As I am not a financial guy, I asked Sarah from the Tech World podcast to explain us all this dilemma. So let's have a look.
Welcome back to the Angry Admin channel. Before we dive into today's topic, please hit that like button to feed the YouTube algorithm. And of course, make sure you're subscribed. All right, let's get into it. Today, we are tackling a massive financial puzzle, and it's all about OpenAI, a company that is somehow being talked about as both a trillion-dollar behemoth and a company losing billions upon billions of dollars. So on one side of the coin, you've got all this buzz about a potential IPO, an initial public offering that could value the company at an absolutely astronomical $1 trillion. Mind-boggling, right? But then you flip that coin over and you see the other side of the story, the burn rate. We're seeing estimates pieced together from their investors that suggest OpenAI could be losing over $11 billion. And get this, that's not for a year, that's for a single quarter. And that right there is the huge paradox we're digging into today. How can a company possibly be a $1 trillion dream and, at the very same time, be bleeding this much cash? Let's break down how both of these things can actually be true. It really all starts with the insane scale of their mission. Look, OpenAI isn't just trying to build a better app or some cool new gadget. They are in a high-stakes, winner-take-all race to build artificial general intelligence, AGI. And a mission that big, well, it needs an absolutely unprecedented amount of money. The CEO, Sam Altman, has been pretty direct about this. He's basically said, look, we're going to need trillions of dollars for the AI infrastructure of the future, and going public is really the most logical way to raise that kind of capital. But at the same time, the official company line is way more buttoned up. While Altman is talking about the long game, a spokesperson comes out and says an IPO isn't even their focus right now. So you've got this really interesting tension between the CEO's candidness and the official PR message. But let's be real, the strategic reasons for an IPO are crystal clear. This isn't just about getting cash, it's about power. It would give them access to massive amounts of capital, let them buy up other companies using their stock, and basically give them the fuel to build out their AI infrastructure and stay ahead of giants like Google and Anthropic. All right, so let's shift gears and look at the other side of this equation, the absolutely eye-watering cost of running this whole operation. This is where the story gets really dramatic. Now, since OpenAI is a private company, they don't have to open up their books for us, but their biggest investor, Microsoft, is a public company. And their earnings reports give us this one critical clue we need to piece the puzzle together. So check this out. In a recent report, Microsoft revealed that its share of OpenAI's losses dinged its own income by $3.1 billion in just one quarter. That number gives us a rare peek behind the curtain at the sheer scale of the spending going on. So if we know that Microsoft owns roughly 27% of OpenAI's for-profit side, we can do a little back-of-the-napkin math to figure out what the total loss might look like. And when you run those numbers, you get a truly jaw-dropping figure, an estimated total loss for OpenAI of around $11.5 billion. Again, that's in just 3 months. Unbelievable. And just to put that into perspective for you, that one quarterly loss is more than half of what OpenAI is projected to make in revenue for the entire year. The rate they're burning through cash is it's absolutely extraordinary. So you've got this massive, world-changing ambition on one side and this monumental, almost unbelievable cost on the other. So the big question is, how do you bridge that gap? Well, it looks like the answer is to methodically start preparing for a future on the public stock market. And they're not just talking about it either. they're already making some major moves behind the scenes. They've gone through a big corporate restructuring to clarify who's in control and sort out their complex relationship with Microsoft, all while trying to keep that original nonprofit mission at its heart.
And a potential timeline is starting to come into focus. Even though the company is denying any set date, you've got insiders and financial advisors all pointing towards a public offering sometime in the next 2 to 3 years, maybe as early as 2026.
And when that IPO finally happens, you can bet the payday for the early backers is going to be enormous. We're talking about the real heavy hitters here, like Microsoft, SoftBank, and Thrive Capital, all these players who place these huge, risky bets on OpenAI's vision. Which, of course, brings us right back to that central paradox we started with, and what this all really means for the future of, well, everything. When it comes down to it, this is a high-wire act. OpenAI is walking one of the most dangerous tightropes in business history. They're trying to balance this mission to literally change the world against the cold, hard reality of running one of the most expensive operations ever created.
And that leaves us with the ultimate question, one I want to throw out to you. Is this insane burn rate just a necessary investment to build a future that we can barely even imagine? Or are we just watching the single biggest financial gamble in tech history play out right in front of us? I'd love to know what you think, so leave a comment down below. Thanks for tuning in, and please don't forget to like, subscribe, and share.
There you have it. Thank you, Sarah, for taking your time to explain us those complex things. And for you guys, I hope you enjoyed that video. As Sarah mentioned, please leave a like and subscribe, share that content, and see you in the next one. Bye.